Hi everyone, Mark here at Tesla. And as you can see on the screen here, Tesla sold off a little bit. It's earnings day, so it might have been a little bit expected, but not very welcome for Tesla shareholders like you and me. The regular trading hours closing price was down 0.71% to $291.26. The after hours trading brought Tesla down to $279.07, which is a 4.19% drop during the earnings report. And as some of you guys know, the Robinhood brokerage offers 24-hour trading on some specific tickers. One of those tickers is Tesla itself. At the time of this recording, it's July 19th, 2023 at 8:50 p.m. Eastern time. So this price could change. But the current price for Tesla on Robinhood's 24-hour trading was $282.68. I've seen it range up to just slightly over $283 and down to around $281. So this is just kind of an estimation that there is some buying happening on the 24-hour market. Maybe the action after hours is enticing some people to buy if they're kind of bullish on the name, because at the end of the day, the stock did beat. So before we dive into the price action of the stocks and talk about the stock market, we'll just take a brief glimpse at the earnings results and some Twitter posters' thoughts on it. Because if you want to know like the breakdown and the fundamentals of the company, there's a lot of channels that will devote themselves to doing that. We just really want to get some brief ideas of what the stock is doing and what it might be doing in the future. So let's switch over to our browser so we can take a look at Troy Tesla's his kind of summation of the estimates and the actuals of Tesla's quarter two earnings. So here's Troy. This is his Twitter at Troy Tesla. So the actual numbers are in. Tesla beats expectations. So their non-GAAP is the beat. It's 91 cents per share actual against a estimate of 80 cents. The overall gross margin is something that a lot of people are really worried about. And as you can see here, it's in line with the street's expectations at 18.2%, which is really, really good. The actual automotive gross margin, excluding regulatory credits, beat a lot of people's estimations here at 18.1% actual, with a estimated by Troy at 16.6, and there's other people that are anywhere from 15 to 17 and a half on the low end, and some uber bulls that were over 20% on automotive gross margin. But this is really good because look, we know that they're selling cars. Okay, they're selling cars at a much lower price, but they're also able to cut costs to kind of capture a little bit more profit, and it wasn't as bad as what people thought it would be. And just kind of think about this. So, their most popular selling cars, the Y and the 3, had really, really steep discounts. The 3 specifically, as they're trying to unload the 3 to make room for the Model 3 Highline, which might be coming out maybe by Q1 of 2024, perhaps. We don't really have any outlook on that because, of course, they don't want to mention a new product when existing product is there sitting on the inventory floor, because all you're going to do is cannibalize your sales essentially. But by first glance, this is actually a very, very good report. So a lot of people are kind of surprised by the price action. So we'll talk about the potential of the stock tomorrow. But this could be a buying opportunity, but this is not financial advice. We don't really know how it's going to work out. So I would say whenever you have a big move like what happened today, you're talking like a 1% to maybe a total 5% move downwards for Tesla, that it's enticing to buy. But I always say, when you have big moves, you really want to slowly get yourself into that position on a new position, because there's a lot of people's rules when it comes to buying after a big move, is that you might want to wait, 1, 2, or 3 trading days to let that price really settle out, because you want people to really absorb the information that was presented in the earnings report for a stock or whatever the news that just broke that caused the sell-off to happen. And then you give them the opportunity to, and not them, but really just, big brokerages, funds, and big money to determine what the new price target for their holding is going to be, or for what they want to buy. And you can scale into a position. Maybe on the first day you're in like 10%, second day you're in 30%, and on fourth or fifth day, you're slowly scaling in instead of doing a big buy out of. And then, of course, if you're day trading, this might be a good opportunity. But if you're investing, you always want to be able to scale into a position slowly, so you don't use all your funds and buy at $280 tomorrow, and only for it to drop another 3%, and you're like, oh, I can't take advantage of that lower price anymore. I'm all tapped out for my monthly purchase, for instance. So just kind of scale in when you see big moves. And this goes for any stock, not just Tesla. You see a big move, it's 4, 5, 6, 10% down. If you like the stock and you want to hold it for a long time, just kind of scale into it. If you're day trading, you might get a good bounce during the intraday trading. That'll get you out. I say that if on these big drops, you might see really large moves in comparison to the drop. It might look small, like if it drops 10%. You might see intraday move though somewhere in the range of 2 or 3%, which on any other day is a really good day. So kind of keep an eye out if you're kind of day trading Tesla tomorrow, but just be really careful. On the next browser window here, we have an image that was included in the deck for the earnings from Tesla themselves, and they talked about the Cybertruck. And this picture is of the Cybertruck production line, which is really, really cool. There's a couple things that that will give us an idea of how close they are to being produced in mass. And as you can tell now, that's not happening at all. This is just kind of mocking up the movement that's going to be on this line. And one thing that's noticeably missing is that there's no robots. There's no automated autonomous machines set up on the line yet. Nowhere. So anything that you're seeing that's coming out of the Gigafactory, either number one, this is an older picture, or number two, they are actually building those first cars by hand. So maybe the line does exist, but you might have people on that line assembling the car in some fashion. So this kind of gives credence to the fact that we might not be seeing deliveries or a handover event until September of this year. So kind of just temper your expectations. Seeing a bunch of the Cybertrucks on the road is really, really cool. But they're still trying to get regulatory and approval and validation for their design in the car itself through different municipalities or from different countries, equivalents to their National Highway Safety Transportation Board or Administration or whatever that might be for a specific country. So just keep an lookout for maybe a September or late quarter handover event and delivery starting. But Elon did say during the earnings call that they're going to definitely start delivering the car this year. Rob Maurer from Tesla Podcast, he runs a great YouTube channel too. So go to his YouTube channel if you want to have a good breakdown of the actual figures from the report. But like a lot of people think, he says this is a great quarter for Tesla. Their earnings were really great themselves. So we know that there's record production deliveries because that was reported a couple of weeks ago. Record energy profits at 18% gross margin, but energy itself is down on the quarter or by, it isn't as much as people thought by a couple $100 million. But what you're seeing here now is that gross margin on these products are increasing. So we know that there was only about $1 billion in free cash flow. I think the street estimate was around $2 billion in free cash flow. We know that they beat on the EPS. We know that their margin has dropped a little bit, but their costs are declining faster than the prices they're discounting. And so this is why we're able to see a good beat today as well. Cybertruck release candidates have been produced. Obviously, we've seen them around. FSD beta surpassed 300 million miles driven. There was a really big bit of news that kind of caused a small spike during the trading after hours, is that Elon was mentioning that a major OEM automotive manufacturer is perhaps interested in FSD licensing. So we always talked about, one way that Tesla can make more money is, utilizing its software, turn itself into a software-oriented business where FSD, autopilot, or just the operating system for the cars themselves could be licensed to other companies, just similar to what Elon's comparison was Android phones on Samsungs or Google phones or something like that. So having if you can ever see Tesla as a tech company instead of just a car company, there's all these arguments saying that Tesla's just a typical auto manufacturer. But the reality is they have great programmers and engineers that allow them to operate, if they wanted to, like a software as a service company who would get margins somewhere in the range of 30 something percent on their products. Now I understand we're around 18, 19, but if he was able to ever license out this software, it would be really, really beneficial for the bottom line. Now, what does that mean, though, is that it's really hard to see it happening. We all want it to happen, but think about like if you are a Ford or a GM and you're talking to, because the reality is the software offerings for these companies on these OEM products are just OEM legacy automotive cars. They're just not as advanced, and they might not ever be. They just, like we hear all the time from VW or Ford themselves, from even the CEO level of these companies, that the software is going to be a major hindrance. They don't have the people that ever have done it in the first place. And we've seen the product of that in things like even Lucid and Rivian, where they just don't have the same efficiency in the programming to make the movements through the operating system just smooth and sensible. So there's a lot of improvement for the software side of the business outside of the company that is Tesla. But if you are a Ford or a GM and you're talking to Tesla, think about what you have to do. You have to, anytime you have a new product coming out, it's no longer a secret. You're going to be sharing the details of this product with your number one competitor, perhaps. So if you have a new car or a new truck coming out and you want to have the FSD put onto that car, well, you're going to have to design the car to accept all the hardware that goes along with the software. Because no, you're going to have factory, so you're going to have cameras placed on the car at different spots, at different heights, at different orientations from each other. So the software has to be tweaked for every car, obviously. So they're going to have to know everything about your car. And everything that you're going to produce is no longer a secret to your number one competitor. It's no different than, think about this. If you are SpaceX and you have basically a monopoly on commercial and even just federal launches, and another provider of satellite internet, because of course the number one moneymaker for SpaceX is the Starlink distributed satellite internet, that there are other companies that do the same exact thing, maybe on a different scale, that have no way to get their satellites into orbit other than using their number one competitor, who is SpaceX, to launch their own satellites. It's like your number one competitors know everything you do before anyone else knows. It's really hard for me to get that until I can maybe accept the fact that they have to accept the reality that there's no other way around this. If at the end of the day, some type of autonomy and autonomy is required for every single car. And why would that be? So why do people harp on this full self-driving and autonomy stuff? And why are people, not just Tesla, but people like Cruise and Waymo, why are they spending so much time and money trying to perfect some type of autonomous driving? Well, because at the end of the day, even as they are built now, which is not they're not a mature product, one would say, but they're still safer than a person. Millions of people are dying, getting hurt every year in car accidents. So this will end up being how people are moved around, just because, number one, a lot of people aren't as good at driving, or due to, physical handicap or age or skill, that even the most basic version of full self-driving from Tesla probably drives 30,000 times better than they do. And what we're talking about, we're saving lives. We're lowering insurance costs. If you can have every car being autonomous on the road, they can actually talk to each other, learn how to avoid each other, understand their speeds without even seeing each other. There's kind of a whole mesh of information coming into these cars. It just makes sense. That's eventually how the world should operate. And why do you want to be driving around everywhere? Now I get there's a small portion of people who love to drive, but the vast, vast majority see the car and the commute as a major hassle in their life. So this is interesting, and it could start a wave of acceptance and adoption, kind of just like how the supercharger system is being adopted by just today, this morning, Nissan is going to start incorporating the NECS port into their cars in 2025, just like every other manufacturer that has mentioned that as well. So, and it kind of makes sense when people say Teslas are going to be like the Google of search. They're going to be the Kleenex of tissues. That's Tesla is going to be the name that people associate with the automotive industry. I think it's really going that direction. And I think myself as very bullish on Tesla's future, but also at the same time, I think I'm very, very realistic. But there's no one who's very competitive in this area. They're just really, and here's the deal: not everyone can be innovative. The people that really change the world there's a very small amount of people that can affect so many. So that's really great news on the FSD licensing part. They wanted to talk about AI a lot, actually, in this earnings report press teleconference. It was mostly just everyone talking about AI, from Elon and himself to even the questions that were being taken during the Q&A with the analysts. They were all interested in Dojo. How is Dojo going to be? How is that going to help make Tesla more money? How much money is going to be required to keep production going on all these new chips and computer boards and the server racks and all the training? Well, the reality is, it seems like when what Elon was saying in the Q&A is that they are producing these chips, but they're still using NVIDIA chips. So NVIDIA chips are basically completely sold out, but they're managing to get their hands on a couple. So they'll be willing to either just use their own or use NVIDIA's. Elon mentioned that there's about $1 billion in planned spend for this Dojo supercomputer that will be 100% focused on training full self-driving through imagery and pictures. So don't think of Dojo as some type of Amazon Web Service that they can start operating that as directly an AI service as a cloud-based profit generator. It's really not that. It's always going to be specifically used to train their AI because it needs more compute. They just don't have enough to do it right and to do it as good as they want it to be. Hopefully we can see that really working itself out by the end of this year. We know that production should be completed on some chips by the end of this summer. But at scale, we don't know how many they're going to be really making and be able to put together and train to affect your full self-driving in your car. But Elon says by the end of this year, he really thinks that we're going to have a full full version release for full self-driving. And this AI is going to be really, really integral in making it best as it can be. So really, really interesting news is that the factory in Texas that's producing the 4680 cells is doing really well when it comes to ramp. We were talking about how we thought there would be issues with ramp, and apparently they're doing really, really good. 80% production quarter over quarter, and their costs are going down a lot as well. They're talking about the Cybercell being the name of the second generation 4680, which would be much more dense in energy. I wonder where this is probably going to still be. I think these are all going into the, we don't really have information what the battery pack is going to look like in this Cybertruck, but I think these are all destined for the current models. They're just building supercharger stations at a clip, many, many a day, it seems like. So they have to be. Don't be surprised to see this ramp as well. That their factory just is going to be trying to increase capacity, because if you're going to be charging every single car out there in the world, you're going to need to do this now. He did mention this caused a little dip in the price action after hours, that the factories are upgraded. We know that they're doing tweaks to Shanghai and to Austin as far as upgrading their production lines. So they don't think it's going to be that big of a deal. It's definitely going to affect the quarter three production, where quarter three production will be lower than quarter two, perhaps. That's the initial estimation from the company. But at the end of the day, if the upgrades make the cars cheaper to build and faster to build, this might be negligible. This might not be anything to even worry about. Here's the 1 billion free cash flow. So as you know, they're spending a lot of money, and this is something we talked about. We were really worried that they would have to raise funds. I'm not saying they're not going to raise funds, but we thought there would have to be some type of capital raise because they're spending so much. And what are they spending money on? They need to put money aside for 1, 2, or 3 more factories. They're probably going to need another Megapack factory. They probably need another battery factory. But I think they're working with Panasonic on that in India. They need definitely a new factory in Mexico and another factory in either somewhere in Europe or India. So in the next year, they have the cash they need, it seems, to do that without having to really raise. They're still sitting. They raised, I think 700 million net and are sitting at over $23 billion in cash, I believe. So it was really smart for them to really keep the cash on hand for what is going to be required. A lot of infrastructure is required. So what does that look like? We're talking about server farms for Dojo. We're talking about a lot of superchargers, because if we need to charge everybody, we need a lot more stations. We need a lot more real estate somehow, some way. They're still building a lot of service centers and sales centers and design centers all over the world. So that's still growing, and it's not really being a drag on the company at all. So that's very good. And of course, the various factories. Let's move on to the price action. Now we did a kind of like a rundown of the earnings. The price action was really rough during the course of the day, but it kind of makes sense. So I currently have the extended trading hours on. I'm going to turn it into regular trading hours first, so we can kind of look at the stock. So here's the daily. We peaked and we rejected hard off of, let's see, look at this. We touched 299 something and sold off really, really hard. And as we talked about, there was a lot of calls, and there still is at 300. These are all going to be worthless tomorrow after the implied volatility crush from the event. We talked about that yesterday. How people that usually play Tesla options during earnings, usually they all become worthless. Unfortunately, even the puts might not even work out. If this gets bought up to even like, let's say mid 280s tomorrow, you can kiss every single option goodbye. They're all going to be destroyed. All of them are going to be destroyed. So let's go to a smaller time frame. Let's see here. Here's the smaller time frame. We anticipated yesterday, we talked about that this was drawn many, many days ago. These squiggly lines, right? These were drawn many days ago. At first, we drew the head and shoulders, which played out. It hit the trend line, sold off from the trend line, went to the trend line, sold off again. And we peeked through the trend line, and we did that yesterday. We ended up somewhere around here. As you can see, this is the beginning of the 19th and the end of the 18th in this area. So there's a gap up. It sold off a little bit, and it did really, really well. Double topped at 299. This was really interesting. It sucked a lot of people in, but unfortunately, it sold off pretty big during the course of the day. And that was a 3% move down. Now, it didn't. If you had options, it probably didn't really affect your options, because the volatility is so high that even a 3% move wouldn't be the 3% move you're used to. Let's say you bought a put at 299 and it went down to 289. It would move, but it wouldn't move as much as you think it would be. Just because that's how the volatility works when it's really high. It takes a lot of movement sometimes to really get some profit out of these options. So, why the sell-off? Well, the reality is the market knows it's going to a big event. This is the start of earnings season. Do you really want to be holding all these stocks when you worry about the overall health of the economy? You worry about it for going to a recession. You're worried about the yield curve. How much do you really want to be invested? And it wasn't just Tesla, but a lot of names, even just the very meme stock-like names, let's say like an Upstart, they all kind of a Palantir. They are up very large and sold off very large, to the point where some names like Palantir itself was up a lot and went red by the end of the day. So the price action today was pretty brutal. Now, that type of move is pretty decent to catch if you're catching it on the indices or individual tickers that don't have a lot of IV. Having a big move like that is somewhere in the range of for some tickers, dropping 4 or 5% intraday, which would be really, 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 if you're watching those names, it would be really, really a really nice day trade. Now, there was a big move from Apple, which kind of set off the selling. When Apple did its move today, I don't know if it really was time. Let's just find out. Let's see if it's time to Tesla. We'll overlay Apple and we'll find out real quick. Oh, I mean, yeah, okay. So here's this orange line. Can I change that orange line? It's like, yeah, let's just change it because it's hard to see. We'll go, I don't know, this light green color. Okay. So the light green color is Apple, and Apple had this really, really big bounce. So Tesla was already up when Apple did this big AI-related news situation. So Apple had this, like, not even Apple themselves, but an analyst was talking about how Apple's working secretly big time behind the scenes to create their own GPT-style large language model AI for their phones or for their product family. And it's sold off immediately. You know, a lot of people took profit at this point. And plus, at the same time, the news is just a rumor. It's not necessarily coming from Apple themselves. And it sold off really quick. It actually caused a lot of the market to kind of sell as well at the same exact time. This was like kind of the cue. Like, okay, we peaked too much. We're selling off for now. And some people, if you're looking at this on a slightly larger time frame, this looks like what's called like an upward thrust after distribution. Maybe this is like a Wyckoff style pattern where you have this kind of consolidation, and then you have a final push up like what happened here. And we were kind of anticipating that with our drawing. We're like, okay, we're going to peak above and then sell off. And I was thinking that we'd be selling off somewhere around here. I wonder how that lines up with our after hours action. So with TradingView, you can change your chart to extended trading hours, so you can see the price action during pre-market and after hours. So we knew that essentially what would happen is intraday you'd peak above and then you'd sell off to the trend line, which happened. So this slightly angled line is the downward trend line, and you saw that bounce off that trend line and came up. So even though the stock was down slightly during the day, which is 0.71%, this was actually very, very bullish to end the day. So to end the day, this was very bullish because it was an obvious bounce off the trend lines, basically both of them. This is the high from September of last year. And like I said, the angle down is a large time frame downward trend line. And we peaked above it and sold down off it. So that kind of creates that narrative that you couldn't hold above the downward trend line. So that trend is still intact in some people's minds. In my mind, you did close above it in certain time frames. So let's look at the extended trading hours and see how everything lined up. Now, it kind of sold off much more. So here's the thing. So we figured it would bounce in this area, that it would find a bottom somewhere around here just because it lined up near a gap. And you can see that during that sharp sell-off upon the release of the earnings. So here's the after hours action in this kind of blue background area. So the report was released, it sold off, it kind of got down to that point, it bounced pretty hard all the way up, and it did kind of like, this is the fake move, this is supposedly the real move, sold back off, and then consolidated until the press conference. So this is when the press conference started. This is when they started the earnings call, and it was a sell the news type of event. You have to wonder, like, okay, so the earnings were decent. It was a beat even, you could say. They maintained their auto gross margin. They are maintaining their operating margin. They're beating on EPS. They have a lower cost of goods. They have a currency tailwind now instead of a headwind. So you can probably see down the future, like, this is looking good. I mean, look how weak the dollar is. How is quarter three going to look? It might look really, really good when it comes to a currency tailwind as well, compared to year over year for that quarter three. So it sold off though. So why does it happen? Like, why does it sell off so much? Because it seems like they have the AI story, but the thing about the AI story, it's not something that you're using in the way that other people like to use AI and see strong bounces in their stock. It's like that large language model type of interaction with AI, because that's like the one that's the most accepted by the public as far as affecting their daily lives. Like, there's no ChatGPT moment for full self-driving yet, because, to be fair, it hasn't been released in a version that can be considered non-beta. Could be happening later this year. Is that the ChatGPT moment for Tesla? Perhaps. But they know they're trying to get there as soon as possible, because the realized margin on that is infinite. They say basically it's with infinite demand, there's gonna be infinite profit, right? So what are we looking at here? So it sold off really, really big. So if I was to say from the moment that this call started to the lowest price, this was a 5.5% move. It then proceeded to be bought up a little bit, and it went up another 1.2% before closing after hours trading. Now, you could say that if I was to draw on this chart that you have kind of a bottoming process. Now, if you saw the trading on the Robinhood after hours trading, it would look something like this, I believe. So it's up, down, up, down, up, kind of making an ascending triangle, something like that. And it's currently at 281.64. So it dropped a little bit since the beginning of the video, but it looks kind of like that right now. So is this an obvious inverted head and shoulders again? Possibly. It's really hard to use these type of patterns in these very illiquid kind of markets. Is it really that illiquid? I don't know. Like the volume chart shows that there has been some decent volume bars on this earnings release. So it's really hard to say, but this is what it's currently looking like right now. And you don't know. So why did it happen? Well, number one, if you were a market maker and you have today's after hours, you have Thursday and Friday trading days to try to affect the cost of Tesla stock to expire as many options worthless as possible. Now, let me zoom out on a slightly larger time frame. Maybe that's too much of a zoom out. How about a 5 minute? We'll go to a 5 minute and let's talk about the strikes that we know have a lot of interest for Tesla. So if we're going to talk about the put, we know there's a put floor at 270, 280 as well. So we'll draw a quick line at 280. And we have one also at $10 intervals, basically 260. So these are our kind of the put areas. And what is our call walls? The call walls are going to be, or the ceilings is going to be, of course, another increments. So it's going to be this white line here at 290. And we have another one at the obvious 300, which had the most interest for calls, and actually any option was a 300 call strike. And as you can see here, it got close to 300. They don't want it anywhere near 300. It got down after hours. It tried to form a base at the 290 intraday during regular trading hours. It kind of did the same thing here, but sold off during the call. And now, of course, these options don't expire until Friday. So we have 2 days for the market to do what? Try to get to the price that will hurt everyone the most. They call it max pain for a reason, because the people that are long and short are not getting anywhere on their trades. Where would that be? Well, it would probably be around the mid to high. I'll draw a box actually. The mid to high 280s. Let's say anywhere from 288 to 286. This is where, if I was a market maker type of person, I'd want price to end up there. Because if it's currently at 282-ish or 281 something right now in Robinhood, let's just say it opens up around 282, 281 tomorrow morning, or even just at 7 o'clock in the morning pre-market trading hour time, that it's in that area. Can you keep it at that area for the next day or so? I mean, why not? I mean, we've seen a lot of names after earnings sell off and stay flat for days, just flat, going nowhere. We've seen that with Meta, for instance. We've seen it with Netflix. It just trades in a range, a very tight range, surprisingly so, after a big drop. Now, this is not the biggest drop in the world. This is like a 5% drop. Maybe when it opens up, it'll be down, 4 something percentage. But you don't want, if you're the market maker, you don't want the price, okay, to get to 290. You don't want it at 300 in any way, shape, or form. They don't want this to ever happen this week. Could it happen next week? There is actually a lot of interest at 300, of course, for next week, and 290 for calls. So they don't want it anywhere on these two white lines. Nothing here, nothing here. Okay, so what about the puts floor. So we know that it kind of went to the 280, but we know that 270 and 260 also have a lot more puts. It found a kind of like a base right underneath 280, and in Robinhood, it's actually above right now, trading above it. So it's very possible that, and I'll be very interested to see it tomorrow. What we want to see, if not really want to see, but we might see, is something like a little bit lower to open in the pre-market trading at 7 o'clock, and kind of just do this depending on earnings of, like, you know, the other companies, like something like this. And maybe it doesn't do it by the actual open. Maybe it's kind of lackadaisical and does something like that to try to get itself to into that range for Friday's open. And so during Friday, you know, I know that they want to expire these options worthless, but the way it gets there can be very, very loopy. We don't really know how it's going to get there. If assuming we don't want the price, or they don't want the price at 290, they don't want the price at 280, ranging between those two numbers or those strikes would be really beneficial if anyone sold any calls. Now, if you sold calls, as we've talked about since for 3 weeks now, let's say, that this was going to range for earnings. It's going to range. It's not going to make a high that you want it to make. Like, if we're looking back over the course of many, many trading days, this is going back into June. So the red line is the price that was after hours. It never got out of our range, really. Like, so to end this range to earnings, I was saying that if you were to sell like a 290, you probably would have been safe. That's not financial advice, obviously, but that was the idea, that the consolidations for Tesla are very, very long. The move was very big too, though. So you have to understand that there was a very large move from January to spring to summer. These moves are very, very large. I understand that Tesla is down a lot compared to other names right now. Like Apple made a brief all-time high again. Microsoft made one yesterday. Nvidia made one yesterday. There's names that are very much suppressed still. And it kind of is very frustrating. I understand completely, because, you know, I remember not just but last year in September and August buying somewhere in the high 200s, being really, really bullish about the name, and round trip 1 year later, you're nowhere any better. Like, maybe you had some extra cash to buy on the lows of this year, but you know that people that have been buying at the prices that have been seen over the past 3 years, it's not, it feels like you're just like treading water. So I'm right there with you. I completely understand. It can be frustrating where you see other names. You're like, maybe I could have been in that name. Like, you know, like maybe if I was in Meta from 155 or Nvidia at 155, you know, where would I be now? I'd be much better off. Like, I understand where you're at. But this is the price action that we have. We're looking long term, like Elon said on the earnings call. Like, this is a long term thing. He firmly believes that he can make Tesla a multi-trillion-dollar company. I don't necessarily disbelieve him at all. You know, there's a very large total addressable market when it comes to cars. You know, don't look at cars just like the current EVs that are being sold and people are fighting for that small, you know, 8% share of vehicles sold. Really think about EVs as this absorbing the market share of ICE vehicles, making those ICE vehicles part of the market share very, very small, and EVs very, very large. And Tesla staying even. It's like, let's say if there's 15 million cars sold in America, and you turn that into from 1 to 2 million EVs into 13 million EVs, maintaining the same market share or even a smaller market share, still translates into millions of cars a year. So I know it's frustrating. You're probably scratching your head like, why is this happening? A lot of price movement is not about the fundamentals of a stock. It just isn't. You know, sometimes you think Tesla trading at $100 a share 6 months ago would match the fundamentals of the company that went on to produce, 900,000 cars in 6 months. Obviously it wasn't. So there was a disconnect between the actual value of the company and what it's trading at, because trading is affected by the options. Number one, it's affected by options. The options they don't want ever to be paid out. Never, ever, ever. And if you're selling options yourself, you don't want to have your shares called away. If you were selling calls at 290 or 300, maybe you were sweating this past week. I know sometimes I was. Like, are my shares being called away? Are they going to be called away now? We don't know. We still have 2 trading days, and there are going to be some bullish movements. So we know that options really, dictate how the price is moving. They're trying to avoid strikes for puts and calls. What else is causing this type of action? Well, you don't know what the market has priced in. We can see analyst estimates and bank estimates and brokerage estimates and fund estimates of Tesla's going to be valued at this. This is their earnings. This is their GAAP EPS. There's their revenue. That's what they're saying, though. But there's still a lot of people that have a different idea of the short-term value of the company. If you're trading Tesla and you have, hundreds of thousands of shares, maybe this is it. This is going to be the price it will range at for a while. Maybe this turns into what was a 2-month consolidation. Maybe this turns into a 4-month consolidation. It wouldn't be unheard of. Or maybe you think it's going to sell off tomorrow, and you say to yourself, like, why would they sell now? Like, we are just at $300 a share. Why sell now? It's only down like 4 or 5%. The thing about it, though, is you don't know when these people bought. I know that you and me, we don't want to sell our shares at all. You're just trying to accumulate them as much as possible. So, maybe one day you can have a nice little nest egg to take advantage of. But if you're a swing trader or a day trader, what if they started swinging these shares when Tesla was $160 a share? Like, getting out now at least locks in that profit for them, and they don't have to worry about it anymore and not be subjected to the price action for the stock for the next couple of weeks. Like, maybe this really, and we'll check into this. Like, if we're staying in a range, like, doesn't mean you can't sell calls again. Like, you can use this opportunity to try to generate income for yourself instead of sitting on hundreds and thousands of shares necessarily. That's not financial advice, of course. I don't want your shares being called away. If you're investing in Tesla and you're happy to invest a little bit every now and then, you don't have to sell calls. But Tesla has quite high volatility, meaning that the premiums on their options are very, very pricey, meaning you can collect a lot of premium. As you can tell, like, if you ever wanted to day trade Tesla and you wanted to buy a couple of calls, you can tell they're kind of pricey. You can use that in your favor. But so if it's selling off and it doesn't make sense to you, it's because you don't know what people have priced in, and you don't know what their basis is on these shares. If they're selling $100 up on a share, you can't really blame them. They were just looking for confirmation. Okay, confirmation was the results were relatively in line, maybe a little bit low on the free cash flow, but the margins are still holding up quarter to quarter basis. Maybe much lower over a year basis, but the company is not collapsing. You're seeing cost reductions and efficiencies. You're seeing ramp of product. But how long is this going to be in the $270 range? Maybe for a while. Even if it's at $260, let's say it's ranging anywhere from $250 to $280. How long is it going to do that for? Like, it could do that for a long time. Just look at the chart. We talked about the consolidations in Tesla. They can be brutal. And like, sometimes you're just sitting there like trying to long it, and you're like, this is going nowhere. This is so frustrating. I mean, that's the whole point, because it's so active and liquid in options. The Tesla ticker is like the second highest traded volume of options, basically, of any other ticker. Sometimes the highest. And if you look at the skew of people, retail people buying options on Tesla, most of the retail's buying longs. They're buying calls. So Tesla is seen as kind of like a cash cow for market makers, where they're just selling options like crazy, manipulating the price as much as they can to keep it within a range that doesn't pay out on these calls. Like I said, we don't know what's going to happen tomorrow, but on these types of moves, I would say look at some big names from last year, like the Metas of the world, and they had strong sell-offs during the spring, the summer, of course, during the Jackson Hole speech from Jerome Powell. When things sell off sometimes, it stays low. I don't want it to stay low, obviously. And maybe there's a cheap trade you can make And we'll talk about that first. We'll talk about no. So the things stay low for a reason is because there's a lot of people trying to get out. Okay, so people really want to get out. They're like, okay, I open up my brokerage account, my shares are down 10%. I don't want to hold this anymore because as a trader, it becomes an opportunity cost. Like I need that money, okay, to make more money. So give me my money back so I can try to make more money on something else. But they don't want the stock to crash even more because they're trying to get a good price for it. So you might see like an L-shaped, just like a straight line right from the open. It's down a lot and just trades right in a straight line. Now, if you see it like that, what's happening is that you have people that want to get out, and so they're looking for every top opportunity to get a decent price for their shares. They're not in a huge rush because they missed the move already. It's gone. The move is now lower. You missed it. If you are still holding onto shares, you're holding the bag, but you want to be able to make money, so maybe you want your money back. So as the price moves up like a minuscule, like 1%, they'll sell and it goes back down. And they'll let two people buy it back up and they'll sell again at that 1% mark. And so if you see the pricing suppressed that way, that's what's happening. If you see it start cascading lower or pumping, so like if you're seeing a diagonal, basically, like a diagonal. Think about this though. And I talked about this in other videos. Thursdays, okay, they're great days to set up a trade for Friday because not everything has a 0 days to expiration option. Like the SPY and SPX and of course the NDX and the QQQ, they have a lot of expiry dates. So you can basically 0 day to expiration trade all day long, every day. What Thursday gives you is the opportunity to have what I see sometimes on Fridays, which is you have a nice cheap entry, okay, at the open on Thursday or at the close on Thursday. And the options are very cheap because they're going to expire on Friday. And what you're looking for is to generate a gap up or a gap down. So you have a quick volatile movement in the morning that allows you to really capture a lot of profit from a very cheap entry. So Thursdays, cheap entry. You see a lot of setups on Thursdays. Thursdays are known to be more red often than green per se. I don't know the exact science on that, but that's what I've seen personally, that during intraday, there's a lot of entry points for a quick, quote unquote, YOLO or lottery play for the next day. To update you guys on the Robinhood thing right now, I'm looking at my phone. It is currently at 9:48 Eastern Time, $281.50. So it sold off a little bit, but still higher than the $279. This is what, of course, a $2 difference, $2.50 difference so far. There is interest here because from a Tesla fanatic point of view, it doesn't make sense. So if it doesn't make sense, you're like, okay, is this a discount? And they just want to be into it and get it now because maybe they think tomorrow it's going to go up. Like I said, scale into the position. If you're very bullish, just kind of nibble at that cheap price. Okay, cheap, quote unquote. It doesn't necessarily mean it's cheap, but the move is just it's a typical Tesla move. The move is essentially made to destroy the value of options. Like if you ever go back and look at the estimated moves for Tesla, like it always seems to work underneath those estimated moves and basically making options with strikes outside of that estimated percentage move just worthless. That's kind of the game when it comes to trading options with Tesla. Yesterday I was talking about how do you get around that. There's different ways to get around that. Playing sector ETFs is one way to experience less volatility. It's not an absolute disappearance of volatility. It doesn't mean that that ETF will have much less volatility. It's just that since Tesla makes up a smaller portion of that ETF, than having, of course, one whole Tesla share that's just 100% Tesla, that you will experience just a little bit less volatility. And it allows you to kind of be cushioned by the other holdings in those ETFs, especially if those holdings are not all automotive. If you're just like a sector like consumer discretionary sectors, ETF sector, because you would have like an Amazon associated with Tesla as well. Interesting enough, Amazon and Tesla, being the XLY for instance, are very much laggards when it comes to the AI boom that really drove up the price of share of like the Microsoft, the Meta, the Nvidias of the world. Amazon, Google, Tesla, they don't really have all-time highs, anywhere near all-time highs. That's just really a Microsoft, Nvidia, and Apple thing. So if you are looking for those longs, I mean, there are names that were very, very competitive with each other in the mega cap market or the semiconductor market. Like look at AMD. AMD's like trading at one of the lowest ratios compared to Nvidia in like forever. And Google, Amazon, Tesla as mega cap names aren't anywhere really near all-time highs. So what you're looking for is that we already have an AI understanding. We get that, when it comes to earnings reports, that's why, Elon led with that AI kind of speech, and AI and the questions from the analysts are all AI skewed. Look for that in the Google and the Amazon reports as well. Look for surprises when it comes to the monetization of AI. That's really, really important, because to avoid a dot-com bust for Tesla and the other names out there, what you need to understand is if this is a bubble, okay, the bubble of AI is only a bubble if it cannot be monetized in a significant way. There's two different ways to approach that monetization. From a business to business perspective, you're trying to increase your business's revenue by selling AI services to businesses. That's a Salesforce. It's the CRM ticker, right? That's essentially what they're doing. And ServiceNow as well. That's you're seeing a large increase, okay, in business spend. That's really driving the GDP growth of this country. They've been sitting on cash to the tunes of tens of billions of dollars in each company, and now they can spend it for a good reason, and that's why the Oracle, the CRM, the cybersecurity companies, the ServiceNow companies, all those type of companies they have a steady stream of cash flow. It's kind of like when SpaceX sells to the government. That's their lifeline during a very high interest rate environment. When you can have a customer that's sitting on a lot of money, because we know that the individuals are not sitting on money. Now, Microsoft had a big move a couple of days ago because they were able to confidently start trying to monetize their AI service that they provide to end users like you and me, retail people, just individual people. Now, the thing about that is, if Tesla can do the same thing, okay, and they're kind of doing it by selling FSD to people because they believe that their AI product, okay, is ready for the market, that's how you can avoid the dot-com crash of 2000, where you have this new technology, which is the internet back then. Maybe you guys don't know what it was. The dot-com crash was about 3 or 4 or 5 years of this enthusiasm and exuberance about this newfangled internet technology. And then you realize, oh, we don't know what to do with it. We're spending tons of money on these companies, and we're investing in Cisco because they make networking hardware. But you realize, but what does the end using company, the Yahoo of the world, what do they do with the internet to make money? The advertising idea hasn't been fleshed out. Okay. We didn't really know what to do with that. And there wasn't enough people. There wasn't like that throng of billions of people using the internet to have eyes looking at these ads, like television and print was still a thing, to really make enough money. Like, you can't charge people for email because email is free from all over the place. There's free website hosting all over the place. So you're looking at AI and you're like, okay, so is everything going to be free? Because I can just use ChatGPT for free right now. Like, no one's making me pay to use some portions of ChatGPT. There's free versions of Midjourney. What do you do here? Well, if the use case is now I can charge people for AI because I have FSD software, or I have a large language model that's really beneficial to my customers, then you're going to see that AI is not a bubble, and in Tesla-like names, Tesla itself can really benefit and won't see a big drawdown because it's actually not an unfounded use of technology. It's not just all for show. Okay, so take some comfort in that. That that's the end goal of anything that a business is doing, is trying to make money from it. You don't want to just do everything for free. And but yeah, that's Tesla's earnings day price action. It's not really hot. The intraday on the regular trading hours is, I mean, kind of expected, where you have like a move towards the 300. They don't want to pay that. Sells off to the downward trend line, tries to bounce, try to look bullish, right? They want to look bullish, and it turned quite bearish. But we've seen worse moves from earnings reports, right? 5%. How bad is that? Not necessarily terrible, but I kind of have to hold my tongue to see what happens tomorrow morning. So if you want to wake up to see, you want to take advantage of a quick trade, wake up early in the morning, 7 o'clock Eastern time, check out the pre-market pricing to see if you have Robinhood. Of course, you can take a look at Robinhood's 24-hour market to watch the price throughout the night. And as the cash hour opens, be really careful for a very sharp response. Now, why would there be a response during the cash hour? Because people that want to sell a lot of shares, okay, they want a very liquid base. They want to make sure that they're, number one, getting the best price for a lot of their shares, and number two, having a lot of buyers in the first place. So even though you have access to buy and sell during these off trading hours, you want to make sure you have the millions of people who are wanting to buy during those hours able to give you a very liquid exit, okay, from your shares. So just keep an eye out for that. Just remember, again, Thursdays can set up the Friday trade. You can buy a call or a put, and then see a nice 2 or 3% movement by the next day, and have a very cheap entry and have a really, really nice profitable exit. Once again, before we go, word of warning: when the market opens tomorrow, so 9:30 a.m. Eastern time, you're sitting at your computer or on your phone, ready to go. Like, I'm longing Tesla. I'm going to long Tesla. Just know, okay, that the volatility doesn't wear off immediately. Okay, if there's a lot of swing in price in the open, be it from Tesla itself or the overall market's kind of trying to find its footing, the volatility is really high. And what we know about high volatility, it increases the premium of these options, making them more expensive. But as the market settles down it could be 1 minute later, it can be 5 minutes later, it can be 15 minutes later. As the market settles down, the volatility would compress down, and then you would see options just disappear in value. I mean, just disappear, because number one, if you're buying an option that expires on Friday the next day, that's already very volatile. But if the volatility comes in a lot, that can go from like a 50-cent option to like a 10-cent option 30 minutes into the day. So kind of be careful about that. Like, if you have a lot of if you really want to rush into a position, and just be really careful of the price you're paying. Maybe scale into it, buy one at the open if you really need to. Buy one 10 minutes later, buy another one 30 minutes later, buy another one an hour later. Or you're coming at it from a different perspective. You bought options for Tesla before earnings, and you're just like, you're sitting here right now listening to this video. You're like, oh my God, the theta crush, the IV crush is going to kill me. It's going to open up at worthless. Now, yes, that's very possible. But at the same time, if like I said, the volatility will kind of like taper off from the open, you'll have a window of volatility in the morning, possibly that gives you a little bit of more of a value to your option. Now, this is not financial advice, because I would hate to make you sell something cheaper than it is going to be later on in the day. But if you're looking to get out, look for the volatility in the morning to work in your favor for a very, very brief moment in time. Okay, just very, very brief. So just if you're needing to get out of something, it might be your only option. I'm updating the price of Robinhood before I end the video. So the 24-hour market on Robinhood shows that it is $280.55. So just about $1.40 something cents above the close in the after hours on Robinhood's 24-hour trading. So thank you so much, guys, for listening. That's it for this video. I need to get this edited and up, and have a good night. Thanks for listening. Bye.